Hey, this is Awais with EminiPlayer.net, and this is a recap for Wednesday, March 12th. So, heading into the day, we had a pretty light econ calendar. Short-term sellers were in control, but the market was now approaching some pretty decent support areas where responsive buyers could step in and we could get a pretty decent bounce. We had pre-market support at 57.75 to 59.75, and the zone had already been tested in the overnight session, so it called for some caution. Now, buyers could have stepped in off that zone as well, but that's something that we had to gauge in real time. The plan also mentioned that, you know, personally, I thought the market still had a little bit more selling left in it, and the lower support zones, 53.75 to 55.75 and below, offered better trade location and higher odds of a bounce out of those zones. So we were open to the idea of buyers being aggressive off the open, but the more conservative setup was to wait for a pullback into support and then look for long setups there. Short-term sellers were in control, but now we were heading into some bigger picture support areas where we could get some pretty decent buy responses and at least tradable reactions off the zone. So our main idea was to look for long setups at the support zones below. We were open to shorting, but we wanted ideal trade location, or basically wanted to short at a resistance zone and not in the middle of the range because we were already quite extended to the downside. So those were really the main ideas heading into the open. Let's jump into the charts and see how it played out. So off the open, we did get a little bit of buying, off the pre-market support, but the upside failed right at the 24-hour VWAP, at the 60-half gap fill, and we started heading lower. So the key trade and the main trade of the day was really the long setup off of the 53.75 to 55.75 initial support zone. This was really the main trade idea that was highlighted in today's trade plan. And the market didn't have to test this zone to the tick and then bounce big. It could have gone a little bit lower. It could have gone to the next zone. But every support zone on the downside, with initial support being the first main area where we expected buyers, offered very high odds of a buy response, and the reward to risk certainly favored the idea, because if we rejected it, because we were overdone on the short side, we could get a pretty decent bounce back up towards initial resistance and even potentially up towards that 71 to 73 area. So really the trade of the day was really entering long right at this zone. Anywhere in this zone. I think this is a zone where it was worthwhile to have a resting order in the book, around the 54, 55, towards kind of the middle to bottom of the zone. But even if you took, the entry around 55, 75, you still had very decent reward to risk, because you could get a bounce back up to initial resistance off of here, which is really how, the market ended up playing out. Once you got this upside bar right here, that basically confirmed that some aggressive buyers were now stepping in, and it was very unlikely that the market would now rotate and go all the way back down again. So basically the low of day was likely in at that point, right? So even if you missed it over here, in case you were unable to get on board, then buying pullbacks at this zone still made sense because we still had enough upside left, right? We were targeting a move up to initial resistance. We had the gap fill over here. So there was still enough upside to justify taking the trade even at pre-market support, but only after you had gotten this upside reaction and strong wide range bars, confirming the aggressive buyer stepping in. And then the other idea that you could have traded was shorting the top of the initial resistance zone, right? That was also an idea that was covered in the trade plan, that were open to the idea of shorting, but only at ideal trade location, right? Which means that we don't want to get caught in the middle of the range. We certainly don't want to short too early, right? Because there is still the upside potential of getting even up towards the 71s. And for that reason, the only place where it made sense to short was up here, top of the initial resistance zone. And, we're not looking for a complete failure or anything like that. This is a rotational type trade where you would be covering at the 63 IB high or even a couple of ticks ahead of it. So it's not, a huge trade, but, you don't need a very wide stop if you're shorting the top of the zone. A 2 to 2.5 point stop is sufficient. Um, and you can shoot for a target of about 5 points on the way down if you're getting in around 68. So that was the other trade idea that was available. These buys over here are aggressive. They're not the ideal trades. I've simply highlighted them because given the fact that the buyers were very much in control on the day time frame, it was unlikely that we were going to get a deep pullback. But these are aggressive setups. These are not the setups that I personally took. Um, they're valid setups. If you're looking to kind of trade some of these rotations, if you look at the internals, you can see that we headed all the way back up to the zero level, and then we just started balancing in a range even on the AD line, and we're holding above minus 200. Typically, that's indicative of a balanced market. And the fact that we went from almost minus 400 all the way up to zero on AD also tells you that that short at the top of the initial resistance zone is a valid setup as well. And usually you're not just going to break through and just continue going directional. Right now you're short-term overbought. You've gone almost in a straight line, from 53.75 up towards 63, balanced a bit, and then moved basically in a straight line from the 59s all the way up to 68, right? So you've made a pretty decent move, first from this support zone and then from this one all the way to the top. So you're short-term overbought. You're going to have some profit taking that comes into the market, and basically we ended up balancing above the IB high for the afternoon session. So these are still valid setups, but they're aggressive setups. They're not the ideal trade on the day. The conservative trades were really down at initial support. These you could still take because you had some pretty decent reward potential. The short up here is pretty decent. High probability trade up here. These are aggressive setups. You can take them if you're willing to take that risk. And again, the setups are valid. You're entering at a key zone, at a key level intraday, but the reward to risk is not quite as high. So if you're focused on being very selective and only taking, one or two good setups a day, then these are the ones I would skip on. This is the one you definitely want to be involved in. This is another one that's very high odds. So that's really how the day played out. The context really supported the idea of getting a bounce off of the support zones below, and that was again the main idea that was highlighted in the trade plan. So I hope that everyone was able to take advantage of that. Now heading into the overnight session and heading into tomorrow, the 61 to 63 half area is going to be important on the downside, and then on the upside, the 71 half to 73 half is key resistance, and that continues to be in play. And really that 71 half to 73 half area is really what's going to help us decide whether the downside is done and whether the strong buyers are now going to push this thing all the way back up to the recent highs. So that really, that bull bear zone that we were using before, the 71 to 73, roughly 71 to 74, that's just a very key area in the market right now. And, we'll be keeping a close eye on that. We can still get some rotation, and it is resistance until it's broken. So, that continues to be in play. On the downside, at this point, we really don't want the market breaking below this balance over here, right? So below the 59s would be a bad sign. And ideally, you don't really even want to see the market coming back below like the 60-61s on the downside if, the upside is going to continue. So those two key areas, 60 to 63 and then 71 to 74 are really going to help us determine where this market could be headed on the larger time frames. Now Thursday is technically rollover day, so March 13th is technically rollover day, but usually the volume slowly shifts from the current expiry to the next one, and usually you get more volume in the current expiry on rollover day, and then by the afternoon session or late afternoon it starts shifting over to the next expiry date, which is now the S&P June contract. So for us, we're going to continue trading the March contract on Thursday, and then we'll switch over to the June contract starting Friday morning. So, for now, the current levels are going to be in play. We're not going to switch over until Friday morning. If you guys want to switch Thursday afternoon, that's up to you. But typically, the better setups are in the morning, and we're expecting more volume to still be in the March contract in the morning. So we're going to stick with that for another session, and then roll over to June on Friday morning. Aside from that, I hope everyone traded well. Let's see how well the S&P holds up in the overnight session, and we will catch up in the morning.